Welcome to another episode on Hungry for Returns, where I answer your trading and investing questions. And this week we have a question from Jim about option trading and swing trading options. So in either case, if you have a question that you want me to answer in more detail, such as a video format, then be sure to submit your questions on our website at tradersfly.com. All right, so let's take a listen here for the question, and then I'll get into it here with a video response answer.
Hi, Sasha. This is Jim. My question for today is, are there any options such as butterflies that can be used for swing trading ideas? That's my question for today. Thanks.
Okay, so basically, if we take a look here on screen, Jim's asking about swing trading ideas with options. And, you know, looking at a butterfly, the way that you can set a butterfly up, if you're not familiar with it, let's just take it from here with an Amazon point here. And usually when you're swing trading, you're looking for an upside move, right? Multiple days to the upside. Now, yes, you could short things 3 to 5 days, 10 to 15 days, 30 to 50 days, depending on how long you hold a swing trade for. But in either case, to make things simple, let's look at an upside movement here. So if we're looking at a butterfly spread, let's just say we're looking at Amazon, and Amazon right here, if we look at the chart, we're right around the 1900 level. So let's say we're looking for maybe a 1950 move, maybe a 2000 move. So if I look here to create this butterfly spread, let's just go ahead and buy a butterfly right over here, and I'll analyze that trade so you can see what it looks like on the profit picture. And let me just spread these wings out a little bit more, just to give you a little bit of a perspective, okay? So we'll have to play here with the strikes simply because those strikes are not traded yet. So let's see, 2000, 1950, and let's say 1940 and 2060 or so. So it goes in 20s above there, okay? So we'll go with something like this. Okay, so you could see what a butterfly really looks like here on the profit picture. So it's looking for an upside movement, and you make the most money over here as that stock continues to head higher, and you lose about $745 if it doesn't move at all. But as it continues to move and it starts to decay, let's just say we continue to move, as you know, with options, they continue to decay. So around, let's say a month or so later, you're looking at maybe $500-600 of profit if you get into that $2,000 range. So here's the thing with options, and really you have to remember that options are just a tool. And when you're looking at a butterfly spread, iron condor spread, you're looking at diagonals, they're really just strategies, and there's pros and cons to different strategies. Now, when we look at Amazon butterfly spread right here, this is a negative vega trade, okay? So you'll get a little bit more benefit as the volatility declines, okay? Now, you could do the same concept with, let's just say, a diagonal, okay? So let me show you what a diagonal looks like. So let's just do, again, about a 2000, and I'll go ahead and buy a diagonal over here, analyze the trade. And we'll do, let's say, about 2000, and let's say 19. Let's flip-flop it here. We'll do the 1960s over here. So you can see this trade's a little bit different. I have a positive vega on this one, but it's still looking for an upside move. Okay. Now here I'm risking much more, okay, because I'm going out multiple months, because I have technically an October and a November one. Let me see if October here and November 18th, yep. So we're splitting these months into between the October and the November. So I'm buying one and I'm selling the near month. So the one further out in time decays slower. So it's a little more expensive to put on this trade. But again, if you're looking for a decay, let's just say about a month later, okay, you're looking at about $780 $800 of profit for a potential risk. Of course, it's going to be a lot higher because of just the options that we're selecting. It's about $4,000, okay? Now, there's just pros and cons to these things. You look at the volatility, right? The vega here is positive. So that means when this sells off, you're actually making, or potentially could be making, some money. So let's say volatility picks up 5 points here, and look, you'll actually be positive. Okay, so if volatility picks up, let's say 15 points, something outrageous right here, you'll be positive about $1,400. Okay, so you can see that this one, you'll actually could be a little bit profitable if stocks sell off. Now, if you look at the butterfly here, in this example, okay, when volatility picks up 15 percentage points and you're a month out, remember, you've already got the decay, you're actually still down on the trade. Okay, if you go to today, and let's just reset that time frame, okay, and we'll bring it back, because today will be, what's today, about the 21st. So here you'll be down about $300, okay? Whereas with the diagonal in today, you'll actually be up $1,100. So you could see both of these are set up for kind of a bullish movement, but they're just spreads, they're just strategies. And I could rotate this diagonal a little bit more if I want. I could rotate it like this and kind of, you know, give it a little bit more room to the upside if I think I'm a little more strong about it. So yeah, you could do many different strategies. You could do an iron condor even for a swing trade. But again, they're just pros and cons to what works for you and what doesn't. Which one has certain advantages when the market sells off, which one has capital advantages, which one has time advantages. So really that's what it comes down to in selecting your option trades for swing trading. Yes, you could just even buy a single call or a single put, but then you have a decay problem. You could do a butterfly, but then you have a negative vega. You could do a calendar, but then you have a positive vega. So again, it's just pros and cons. They could all work for swing trading, but the one thing to keep in mind is if you're looking for a swing trade, make sure you give yourself ample of time, or just think about the time value, because options do decay. So when you're trading spreads that benefit you with time value, like let's say the butterfly spread here, that with time, it'll benefit you if you get into that sweet spot, then you want to make sure you account for that, okay? And if you're doing things like diagonals, again, you want to account for the amount that the stock will move and then that time premium or that theta. So that's one thing to keep in mind. You don't want to choose option trades that are too short, because if stock's idling for 10 days, 20 days, then you might not get or hit your strike prices or your desired price, especially if you go really far out, like let's say 2,400 on Amazon. Well, chances are it's not going to move 400 points in the next week or two. Anyways, so that's kind of the thing, is that you can use swing trading on any type of option spread or trade. It's just you would just tweak them a little bit differently, and that's just all about knowing and understanding how different option spreads and trades work. Anyways, thank you so much for joining me. I hope you enjoyed this video. If you want to submit your own question, then be sure to go and visit our Traders Fly website. Or if you just want to hang out on YouTube, then subscribe to the channel so you can see more other great trading related videos and questions. Thanks again, and I'll see you next time.